Hello folks, we've spoken about the cost of insurance on the channel in the past, and as some of you know, I've got long experience of working in the insurance industry before I had a midlife crisis and started to do this for a living. But while we talk about why insurance has gone up and how you can possibly save a few quid here and there, all those kind of things, it's not often anyone actually tackles what they would do to fix the cost of it. Now, many people don't believe me, but I can tell you from first-hand experience that things like car insurance, things like house insurance are very, very difficult for insurers to make money on. And there are a myriad of reasons for that I've talked about in other videos. But my sponsors, ALA Insurance, recently did a survey and it showed that actually a lot of people are putting insurance policies really quite far down the list of priorities when it comes to their household budget. And obviously that can mean you're left out of pocket, and it could mean you're in trouble with the law if you skimp on things like car insurance. But the cost of car insurance is driving some people to despair and will undoubtedly mean that we've got more uninsured drivers in the UK than we've had in the past. So I want to just tackle what I think would be a few simple measures, some more simple than others, I have to say, that would help bring the cost of insurance down for everyone, not just for you or me, but for everyone. Now, the first thing is that we need better regulation from the FCA, who is the regulator for the insurance industry in the UK. At the moment, they do lots of things in the name of the customer, and in my personal opinion, many of them are not of any real benefit to the customer, and they end up costing customers more money. And they really need to be more effective, and I think they need to become more effective by seeking more advice from people that have worked in customer-facing environments and speak to more consumers, because what the consumer actually wants and what the consumer sort of told they want by the FCA, if you like, seem to be two different things. Certainly from the sort of pool of friends that I have and from contacts I have in the industry, etc., I think they're two different things. FCA brought in something called fair pricing a while ago, and that essentially means that your insurer shouldn't be offering you a renewal price that's higher than it would be if you were a new customer on the same day. All that's really done is put prices up, because the insurers now have to do a massive amount of work to prove to the FCA that they're being compliant with this new regulation. And for some companies, it's the difference between them staying in business and not, because the amount of work they have to do is epic. It also means that they're no longer offering discounts to get new customers in because they're not allowed to. So that makes the market less competitive. Back in the day when you could just shop around every year, if you were someone that shopped around, you got rewarded for it. Many people that chose not to shop around realised they probably paid a bit extra for it because insurers were price creeping, it's called, where every year they put your price up a little bit. But for some people, paying an extra 10, 20 quid a year was less hassle than shopping around. If you did want to shop around, you could benefit from it. That's been sort of taken away, really, by the FCA's fair pricing. In my opinion, the FCA should be doing much more to control claims costs and controlling claims costs effectively. That means things like standing on third-party claims companies that are getting involved and putting a massive amount onto standard car insurance claims. One of the biggest areas that they inflate prices is with car hire costs. Now, it's not unusual for some of these accident management firms to be charging insurers £200-300 a day for a hire car for someone. And then sometimes there's also a delay in getting parts out. And that means that actually that 200 or 300 quid a day, instead of being for 3 days, turns into 3 weeks or 3 months. And as you can understand, the costs of that claim go absolutely through the roof almost instantly. The other thing they'll do is they'll sort of justify this high cost by giving you a car that's bigger than you've got or bigger than you want. So let's say, for example, you drive a Ford Focus and that has to go in for repair. They might give you a Volvo XC90. So they'll give you the top car they can possibly give, and then they'll charge an exorbitant amount of money for giving you that car as well. And I've even been told about circumstances where someone said, don't bother giving me a car, I don't need one. And they've had one delivered anyway, and it's been collected 2 weeks later than the agreed collection date. things like that. These are all sneaky ways of pushing up the price of claims and indeed their own profit margins. And the other thing when it comes to claims is the use of replacement parts. More or less all use brand new parts when repairing cars. Not always manufacturer parts, some will use patent parts, but they will use brand new parts. Now, if they were to use used or refurbished parts, certainly things like body panels, I don't see any reason why you shouldn't get a replacement passenger door from a scrapyard rather than getting a brand new one and having it painted and all the cost that goes with that. Don't forget, at the time you've had your accident, unless the car's sitting on the forecourt and it's brand new with no miles on the clock, it's a used part on the car already, so why not replace it with a used part? That would solve a lot of problems with delays in the supply chain, which would then help to control those higher car costs. It would solve a lot of problems in terms of cost, because a replacement door, for example, is going to cost a lot less than a new door, and then a complete respray on that new door. Yes, sometimes paint might need to be dealt with, etc. But hopefully just simple things like this could really bring down the costs of claims. And don't forget, if the costs of claims go down, then insurance premiums go down. It's as simple as that. Next things are the aggregator sites. People like Confused.com, Compare the Market, Money Supermarket, etc. They charge a hell of a lot of money for the insurers and brokers to advertise their prices on their sites. An alarming amount of money, in fairness. And for those brokers and insurers to appear near the top of the list, it also means they're often doing it at zero commission or indeed at a slight loss. And they then intend to make their money back by keeping you on at renewal and by charging you fees if you make any kind of change to your policy. Now, back when I was doing car insurance, back when dinosaurs roamed the earth, you would never charge someone a fee for making a simple change on their policy. Nowadays, it's typical to get charged 40, 45 quid for really the most basic of changes. More controls on these fees by the regulator would hopefully bring insurance premiums down, because if your insurer or broker has to pay 90 quid to get your business in from that particular aggregator site, and that 90 quid turned into 50, common sense suggests that your premium might be £40 lower than it would be otherwise. And then let's have a special mention for electric cars. Currently, most insurers, if there's any kind of sign of any damage whatsoever to a battery pack on an electric car, they will look to write the car off, simply because they don't want any liability if that battery pack's damaged in any way. Really, they need more training in the industry to understand the makeup of each individual battery pack and to see what does constitute a risk and what doesn't. They also need to look at repairing battery packs, because if every time something happens they need to replace a battery pack, as they seem to be doing at the moment, it's writing off perfectly good cars that have got pretty much nothing wrong with them. And I think really it comes down to a lack of specialist knowledge, both on the insurer side of things and from their loss assessor side of things. So some investment in training and expertise on the insurer side of things and the loss assessor side of things would certainly seem appropriate, and would hopefully mean that far fewer very good electric cars could live on after an accident rather than being pointlessly written off. Folks, I could go on for hours on this subject, but I don't want to bore you any more than I already have. What I'm saying here, though, is that the price of car insurance going up and up and up is something that is controllable, and it is controllable by a regulator, and a regulator that actually acts effectively and is really supporting you as a consumer, rather than paying lip service to things and grabbing headlines for things that actually push the price of your insurance up. I have seen other content on the price of car insurance on YouTube, and I've seen a fair amount of rot in some of that as well. There are people suggesting that insurers are making hundreds of millions from car insurance in the UK. There are insurers making hundreds of millions of pounds, but the car insurance side of things is not doing much of it. Most of those insurers are also in pensions and investments, they're in life insurance, they're in commercial insurance, all that kind of stuff. Believe me, folks, car insurance is not rich pickings at the moment. and it hasn't been for a long time. Also, I've seen some nonsense about the way people are rewarded for selling insurance. I've been in the industry for 20 odd years. I've never seen the likes of it. Now, it's that survey from ALA Insurance that I mentioned at the start of the video that's sort of led me to making this video. So I feel it only fair to give ALA a shout out. ALA is a family business. They specialize in motor ancillary products. So that's not actual car insurance, but it's things that go around it. So things like warranty. You can now get warranty including breakdown with them as well. Gap insurance is a major product for them, and if you've got a car on finance or buying a car for good money or leasing a new car, you should certainly be thinking about getting yourself some gap insurance, scratch and dent cover, key cover, all these kind of things ALA can help you out with. So if you're interested in any of those, go to ala.co.uk, and the code GYM10 gets you 10% off any of the prices you see on the site. I hope you found this video useful. I hope you found it interesting, and I look forward to your comments below. Please give it a thumbs up, please subscribe, and I'll see you on the next one. Huge thanks to all my channel members for your continued support. I really do appreciate it.